Hey, it's Jack from Jack Gately Real Estate and the Online Real Estate Academy. Let's take a look at our single-family home market update in Massachusetts for October. Prices have dipped again. Let's look at the most important indicator of all, price. We had a June peak of $792 for your average single-family home in Massachusetts, and now we are at $699. It's basically $100,000 off the peak from the crazy hysteria of the springtime. And so that remains consistent with the conventional wisdom out there that you've been hearing, that the real estate market is softening. I do not want to call this a buyer's market yet. It is not that, but we are kind of headed in that direction. I would still say we're leaning seller. We're leaning seller market, but we are kind of coming about, and we probably will hit equilibrium soon as more and more buyers continue to struggle with high interest rates. Assuming that interest rates remain high, if the Fed changes its policy, then that's another ball game altogether. But, the conventional wisdom, for whatever it's worth, is that interest rates will continue to go up. So here's another indicator that things are slowing down. We had a peak over June of 107%. So if you listed your house for $100,000, you would get $107,000. Now, for 2 months in a row, we are holding steady at 101% of original price. So the sales price, if you listed it for $100,000, you are now getting $101,000. And remember, people are buying for much more than that, and therefore this number represents a lot of dollars. But we will really not be in a buyer's market until this number drops well below 100. We get it down to 98, 96, something like that. Then we'll be in a buyer's market. But we're not there yet. We might not never get there. Interest rates are a very big factor. Another indicator that shows us that things are starting to slow down a little bit is days to offer. Now, as I've mentioned before, there's a lot of variation in this number, but the trend is what you want to look for, and it does seem that we had like a bottoming out of this trend once again in June, which would have reflected the spring market, and every month since then it's been going up. So I think we're now over 20 days for days to offer. That's from when you put the property on the market to when you actually accept an offer, up to 3 weeks now. From the low of we were down to 12 days or something like that. So again, the trend is what you want to look for in this number, and it's up. People are taking a little bit longer. It's not 60 days like it was in the, we don't even want to, you remember those days. When not 60 or 90 days, it's 20 days, 3 weeks. Still favoring the seller, more or less. But this statistic is a little bit beguiling. How many houses were sold, single-family homes, in Massachusetts last month? And the answer is 4,338. And as you can see, I put some historical data here. We did 5,000 last September, 5,500 2 years ago, and 4,500 3 years ago. So you can see this is the lowest in the last 4 years. Therefore, there's just not a lot of deals getting done. And that again would favor the seller. Of course, the sold statistic is a lagging indicator. I'm much more interested in the leading indicator, which is what's on the market in any given month. And I like to look at the number and track it by what's on the market on the first of any given month. So on October 1st, we had 5,448 homes, single-family homes, on the market here in Massachusetts. You can see that that's a trend line going up from the lows of February and March of earlier this year. And this is going to be the line that I think I've mentioned to you this before, that I really think that we need to crack the 6,000 number and have it stay up there for several months before we really see that move to a buyer's market, if we ever get there. And at least, someday there'll be a buyer, but I mean in 2023, if we ever get to a buyer's market in 2023. And right now it's moving up, but we usually have a seasonal downturn, as is traditional, in December, January, and February. So if this number slides back down to the 2,500 number or something like that, then we have to start the whole process over. But if it stays high during the winter, that will, I think, portend a much different spring market, if you know what I'm saying. So let's keep an eye on this one as a leading indicator for where the market is. When there's a lot more choice in the marketplace, then that's going to affect price. You get the idea. And also, big variable, as I said earlier, are interest rates. And of course, we think they're going up. And remember, when you buy a house, you're buying two things, right? You're buying the real estate, and for those of you who are not paying with cash, you're buying the money to pay it, right? And those interest rates tend to go up. Now, there has been some rumblings that the Fed could change direction or maybe not move as swiftly. There had been talk of a interest rate hike in November of another 0.75%. Now, they just did 0.75% or 75 basis points. And the conventional wisdom up until very recently was that they would do that again. But now the market is thinking that they might only do 50 basis points. So not as aggressive. We'll see. We know that in England, that just last week went in two directions. They were politically wanted to tighten monetary supply, but then the Bank of England had a mini financial crisis with their pension funds. I don't want to get into the details of it. And they injected more money into the bond market, which of course is inflationary. I know. So you might see a softening in the Fed stance. It's something that all of us in the real estate agents industry are looking at very closely, and you should too. Hey, I'm Jack from Jack Gately Real Estate and the Online Real Estate Academy. Thanks for watching. Have a great day.